Hi everyone, welcome to my July portfolio update. In this video, I'll walk you through how my portfolio performed over the month, highlight any key changes, and share a quick market roundup of the major events that shaped July. As always, this is not financial advice. Everything here is my personal opinion, and always make sure to do your own research. To start, let us look at 3 ETFs I am invested in to get a sense of how the market performed in July. Vanguard's All World Fund, VWRL, declined by about 1.4%. The S&P 500 Fund, VUSA, which tracks the largest 500 US companies, fell by 1.56%. And the Emerging Markets Fund, VFEM, slipped by 0.88%. So overall, a slightly red month. Turning to my own portfolio, I did see a larger decline of 2.3%, with a money-weighted return of minus 2.8%. As I am invested for the long term, these short-term moves don't worry me as much. I will still keep adding new capital through both the green days and the red. One of the most satisfying parts of investing for me is seeing a small trickle of returned capital in the form of dividends. It's a great motivator, and one of the main reasons I prefer distributing funds over accumulation funds, where dividends are automatically reinvested. Even though I do always reinvest my dividends back into the same company or fund I receive them from, I like the flexibility that one day I could take the dividends as an income and use them in my everyday life. In July, I received 3 payments from my distributing funds: VWRL, VUSA, and VFEM. VWRL is my largest position and gives me global equity exposure. It paid me £66.30, which I immediately reinvested. It is my biggest dividend payer over the year, with a yield of around 2.1%. The USA, my second largest holding, offers exposure to the 500 largest US companies. It paid me £18.10, with a yield of 1.2%. Finally, VFEM, which focuses on emerging markets like China and India, paid me £26.37 and has the highest yield of the three at 2.3%. I will admit there is some overlap here. VWRL is roughly 60% US equities, so in the future I plan to do a video exploring ETF overlap and whether it is wise to tilt so heavily towards the current dominant market. Moving on to portfolio changes, every month I invest a set percentage of my income, currently around 25%. I usually split new capital between individual companies and ETFs. As I mentioned in the June update, because when I got paid, I invested new capital in early July. Here's what I bought. I purchased £200 of VWRL, bringing my total share count to 98. This ETF is a core position for me and provides broad market exposure with a steady quarterly dividend. Next, I bought £150 in Meta. My thesis here is that Meta represents a strong long-term growth opportunity. The share price has been under pressure due to rising capital expenditure, even though revenue continues to grow. For example, in the recent Q2 earnings on the 29th of July, revenue was up 28% year on year, yet the share price fell by 7% after earnings due to missing its EPS target and raised its capital expenditure guidance to 130 to 145 billion, up from an earlier 125 billion. The concern around high capital expenditure is valid. Other tech giants like Google, Microsoft, and Amazon are also ramping up spending, and the return on that investment isn't yet clear. Still, based on my research and thesis, I am comfortable taking the risk of Meta, and I do plan to keep adding to this position throughout the year. Next, I invested £100 in Uber. I have talked about this company before, and my thesis is that its strong network effects and the potential of autonomous vehicles do make it a compelling long-term growth play. The recent dip in share price gave me this opportunity to add more shares at a lower cost. I also sold Mobility Corp, a spin-off from SSME Global, and reinvested the £50 into Meta. Finally, a mistake, and I do think it's so important to share these two. I invested £50 in July into Sivers Semiconductors, on top of an initial £500 back in May. This position is currently down by 67%. I rushed into it and ignored my usual investing discipline. That said, I have done some research into its sector, photonics, and this technology could revolutionize how data is moved and processed. So even though my entry into Sivers wasn't ideal, I will continue to research this sector as a potential source of future growth, and I'll plan to explore it further over the coming years. Market Roundup. The question of who will lead the UK has finally been answered. Andy Burnham is now Prime Minister. So far, nothing's been announced that directly affects my portfolio, but one promising development is talk of reforming social care. If implemented, this could save families in assisted living thousands of pounds every single year. A proposed social care levy, essentially a new tax, has been mentioned as a way to fund a future national care service. We'll have to wait for the details. The Iran-US conflict. Unfortunately, unlike the UK's leadership question, the conflict between the US and Iran remains unresolved. The ongoing instability in the region that supplies around 20% of the world's oil continues to fuel investor uncertainty. For now, it's a case of watching how things unfold in August. Trump's tariffs. Adding to global tensions, President Trump has proposed new tariffs between 10 and 12.5% on imports from around 80 countries accused of using forced labour, including the UK and the EU. When the Liberation Day tariffs hit back in April 2025, markets sold off sharply. This time, the reaction has been much more muted, suggesting investors expect Congress or the courts to once again block the measures. Again, we shall see how this develops. To add, recently the Trump administration has paid $100 billion back to businesses affected by the previous liberation tariffs. AI sell-off fears. July did see what could have been the beginning of a deeper sell-off in AI-related stocks. In my own portfolio, ASML fell by nearly 15%, partly due to reports that a Chinese company may be developing similar machines that could challenge their monopoly. Micron, another former AI hype stock, dropped nearly 40%. The narrative now is that AI stocks may be overhyped, that demand for chips and services could be unsustainable, and that the heavy spending required to harness AI might not deliver adequate returns. If this is the start of an AI bubble deflating, I will stick to the same disciplined approach I used during past sell-offs, continuing to invest in broad market ETFs and well-researched companies. Getting scared out the market destroys wealth. Staying invested builds it. Q2 earnings. Finally, on a brighter note, the Q2 earnings of this year brought strong results from some major tech firms like Google, Amazon, and Microsoft, sparking a broad market rally in these companies. For example, Amazon's AWS platform posted an impressive 37% year-on-year growth, showing that heavy investment in AI and infrastructure can pay off. As discussed in the previous section, Meta's earnings were weaker and did lead to a sell-off. This is because they are posting higher guidance for their capital expenditure, yet not showing what that return is just yet. We must wait and see for more earnings reports. Okay, I hear you. I know what you're saying. Where is this excellent pipeline of videos that he has been promising these past few months, including looking at how I do my portfolio, individual companies, and much, much more on other finance topics? All I can say is, well, they are coming. Things have been a bit busy for me lately, but I'm aiming to settle into a schedule of 2 videos a month, including a regular portfolio update. I think that is a pace I can keep up with, and we'll see how it goes. But I can confirm that my next video will look at how I structure my portfolio. Looking at the more technical side of my channel, I am now using a new microphone to record with, so I do hope the audio quality has improved from previous videos. Thank you so much for watching. I really appreciate it if you made it all the way to the end. If you have any questions or comments, please drop them below. You can find the QR code to the Slug Finance Instagram in the bottom left, where I produce short form content. Thank you again, and I hope to see you in the next one.